What's going on, y'all? Let's jump straight into this big move today with the CPI print, which we're going to go into. Didn't take long to retrace this move. I put this on X earlier that when I initially saw the move happen, the first thing that really stuck out to me was perps are way ahead of the spot flow. And this has been a repeatable signal that has just preceded pretty much every single one of these moves like this, which is there's not a lot of spot participation. Okay. Obviously, this was headline driven. You had people who may have been hedged into it. Some people chase it as it's happening, thinking, oh, cooler CPI, trend change potential. Of course, if you've been trading this market for a while, you know that that's not something that's going to reverse this sort of situation we're in, which is a significant bear trend. Okay, we've been talking about this in previous videos, but I want to mention that this perp to CVD spread, and you can see this on Market Monkey here with this aggregated CVD perps versus spot percent plus delta. It's great because you can really see, the discrepancy very easily. Okay. And the big discrepancy here is really Binance. I think they are, and I haven't looked at some of the other tapes, but I bet you it's really just Binance dumping Bitcoin at a clip the market just cannot absorb. And that's what's really influencing that discrepancy. Now, obviously, it's not just Binance, but I think they are obviously the heaviest mover of this market right now. Okay. So hopefully you got a piece of that. It was not easy to predict, but like we talked about last video, waiting for these events to happen and to see that they've left prints behind. We're talking about these single prints on the TPO. This one did that. You can't see it now because it's filled it, but when it went up, it left a gap around here and it filled it fairly quickly, like we talked about. So that's really the trade we're going to talk about on the low time frame. I want to actually zoom out here though and talk about sort of a bigger thing happening. Okay, a little bit more of a swing trade conversation today. We'll come back to this on the X account, but I want to zoom out because I'm seeing something here that I think will be a good opportunity in terms of Bitcoin. But I want to look at SPX first. We're going to zoom way out here and say, what is SPX doing here, right? This thing has gone up in a straight line from the April lows. This is really the first real consolidation that we've had since the bottom, or really signs of weakness since the bottom. If we pull out just basic trend, moving averages, we can see that this thing is still right on the 50-day moving average, sort of battling that right now. But it held it pretty much the entire way up, with the exception of this move we had last month, but it quickly recovered. We can see when we zoom out that this is starting to show signs of a top, in my opinion. Doesn't mean that it's not going to try higher or stay up here for a while, but it does to me look like this is signaling it is in a topping phase. And if you look at the weekly RSI, that's what a lot of people are starting to point out, and I think for good reason. You can see these bearish divergences that have occurred in the past. So here, okay, right, which is RSI is not making new highs versus the price. And we saw this actually on Bitcoin as well. It did the same thing over a really high time frame, but also on a lower time frame, right? Made a new high here, did not make a new RSI high. That is a bearish divergence. Now, obviously that on its own is not going to be enough to say, oh, top is in. I think what we are setting up here is potentially some selling off going into the end of the year, but I don't think you get that crazy much downside on stocks on the SPX just yet. I think if we do top out and we start to see bigger moves to the downside, that's probably going to be later next year. So I say that to say I think Bitcoin is actually setting up for a pretty good bounce going into Q1, which is it looks like crap everybody wants to write it off. You know, you got tax loss harvesting. No one really wants to be involved here. If this does test below, so I have this alert here at about 84, but let's just kind of zoom in. Really anywhere under this little node here, if you will. Okay, I'm interested. Okay, I'd like it to go all the way down to 70. That's like my preferred level, like pretty much everyone else. But anything below like 83, I start to really pay attention, and I'm going to be looking to add a position going into the new year, because I don't think this just goes down in a straight line, guys. I just don't see that. I think it's going to take time. If we're going to get lower levels, the 60s and 50s, which is, I'm not saying that's going to happen. If that does happen, I think it's going to be after a lot more ranging sideways above 70, in my opinion. So anything really below here, 83 to 80, I really start to pay attention, and I would really want to pay attention, you know, sizing more aggressively if we start to get under 80 and we see some good signs there. So I am interested in setting up a swing trade going into the new year. I'm not saying it's going to be like a huge bounce, but to retest that 200-day moving average Q1 makes a lot of sense to me. So here's that 200-day moving average we've been talking about. And it's not a rule or something, right? I'm not saying like it has to do it, but if you look in previous bear markets, it likes to test them, or at least, you know, climb back to them, you know, somewhat. I mean, we're so far underneath it, and you can see in the past, you know, and even in 2018, which this was like, this got so far above it, but you can see it tested multiple times. Okay. I'm not saying it's going to do it immediately, like I said, but eventually we will. And I think it could take months, but this will meet us lower at some point. And if we can get a position here, I think it's going to come closer to it, if that makes any sense. I'm not saying test it, but just get closer to it. I mean, it's super far away from it right now. And that is mean reversion, right? That's ultimately what that is. Maybe we should really be looking at like the 100-day moving average. I'll just show you that one, just to show you how far away even that is. So here's your 100-day moving average. You know, it's at like 104K. Right? I mean, we're just so far away from trend, and I expect to see some reversion Q1. So I think this is when you want to start to pay attention. Now that we're clearly probing this low again, people are going to get bear hold. They'll probably, you know, I think they'll probably screw around with people down there, make people think it's going to go even lower, and then we're going to get into the new year and you're going to see a pump, because we know how Q1 is. A lot of funds want to add Q1. Why? Well, you're starting off the year at 0-0, you know, or, you know, no P&L, okay? And some people are just going to put some chips on the table, right? So I do think we'll see some flows, and look, it's not going to take a lot to get a pretty good short squeeze, and it's reflexive, right? So, you know, I wouldn't be surprised if we got closer to 100 early next year. But from, you know, low 80s, just getting back to like 90, 95 is a pretty good trade, right? Okay. I think that's all I want to talk about today. We're going to keep these videos short. If you like this, give it a thumbs up, share with some friends. And until next time, happy hunting, friends.